If you are considering launching a new business or are in the process of setting up a new business, this video is going to help you tremendously. And I make this promise not in vain. I will share with you some of the decisions that I see many startup founders failing to make, or the mistakes they make right at front that ends up costing them substantially much more money than it could have been if they had taken the time and the initiative to sit with a professional, an accountant, a lawyer, to help them set up the proper structure or the proper legal structure, as well as accounting structure that is matched with good tax planning. And because of this failure, often I see a lot of entrepreneurs who are either strapped in business structures that do not facilitate them to take advantage of the existing tax code to reduce their tax burden, or sometimes they are these accountants who actually have no idea how much they have invested in the business because they have very poor accounting records that allows them to make sense of what actually they have invested in the business, what is their basis in the business, and one day if they want to sell the business, they are more likely to be taxed in the entire amount they receive in the sale of the business than they could have actually been able uh, to reduce as part of the tax burden. So I am going to encourage you to watch this video to the end. I'm going to now share my screen to walk you through some of the decisions that you have to consider. A few of them may not apply to you, but I guarantee you a lot of them will make sense to you, and you have to make them accurately. And I'm gonna explain to you what they means and what are their implications to you and your business as well. So here's the first screen that I want to show you to walk you through some of the decisions as a new startup founder you have to make and you have to get comfortable making. So the first thing that you have to think about is the type of entity your business will be. Correct. So a sole proprietorship doesn't provide you any liability protection in case something happens in the place where you do business, or you get sued. People can reach into your personal or family asset. So it's not an ideal form of entity that you want to use to do a business. The other three here, a corporation or an LLC or an LP or an S corp, they provide you better protection. They provide a veil that blocks that legal liability to reach to your personal asset. So not as a lawyer, but as an accountant, I advise my clients to have a legal entity that provide them a protection, and we'll use that legal entity to map out a tax planning strategy that allows them to reduce their tax burden. So corporations, of course, they are easier to raise capital. LLCs and LLPs are not really good for raising capital. S corp have a number of limitations and may be good to raise capital to a certain degree, but corporations are the best. So if you're considering raising capital, you may need to go towards a corporation. And if you are, for example, inclined to go towards a real estate deal or real estate transaction, LLCs and LPs could be the best way to go. But again, each person's case are particular to them and are specific to them. They require individual advice. So this is the decision number one you have to think through. What type of entity I will have to run this new startup, okay? So the second decision here is exactly in terms of deciding whether you're going to be a fiscal year or a calendar year, right? Let's go back to the entity here, type of entity. You decide that you want to be an LLC, okay? And then in the tax year, you have either the fiscal year or the calendar year. Fiscal year is basically you can begin your economic activities in a given day, any day of the year, and you close in any other day of the year, but it have to be a complete 12 month. A calendar year is the traditional January 1st to December 31st. That's the calendar year. So you have to decide between two. The calendar year is the simplest and most often used. So this might be the best option for you. The third decision you have to make is in terms of your accounting system. This is where a lot of entrepreneurs or founders make a big mistake, right? Because in their attempt to do it yourself accounting by using accounting softwares out there, they have no idea whether they are running their business through a cash basis or accrual basis. What does these two even mean? An accrual basis basically it tells us when to recognize revenues and expense and their timing. Okay, so in accrual basis, you may not actually recognize revenue in a period if it doesn't meet the revenue recognition criteria. Okay, the cash basis, you recognize revenue and expenses at the moment that you actually spend the money, right? So for example, if we are in December 31st, you use $500 to pay for a consultant, you can write it off in that year, okay? But in the accrual basis, if you pay $500 for a consultant in December 31st, but the service is to be provided in the next year, in the following year, you can't write off that as an expense because it's not for that period you paid for. Okay, so that's just one of the difference. And just by the way, most businesses, small businesses that I deal with that probably you are considering to start is going to use a cash basis of accounting or a mix, a hybrid system between accrual and cash to keep things like depreciation, amortization of the capital assets, and so forth. So that's another point that you have to really think about, and hopefully you'll seek a professional advice to make this decision to set up a system that actually allows you to have better information. Because if you don't have good accounting information, you are not going to be able to develop good tax planning system. You're not gonna have better information to make better business or investing decisions, and the growth of your business will be stalled. So make sure you have a good accounting system in place. So these are the three decisions that we covered so far. The next decision you will want to consider is whether you will allocate your personal resources, your computer or car or building, you plan to contribute them to the business or not. Right? So let's say you want to contribute some equipment, some of your personal cash, then right, we're gonna add them to the business. So if you working with an accountant, they will make sure to account for this contribution that we will calculate in a few minutes here, what is considered your basis in the business. A lot of people, unfortunately, this is where they miss a big opportunity that can save them money in the future, right? They contribute cash, they contribute equipment, they even contribute their personal vehicle or even facility. But because they didn't consult with an accountant, what ends up happening is they have zero basis in the business despite having contributed substantial amount of initial capital to the business. Okay, so don't make that mistake. Seek a professional advisor to help you make good and informed decision. The fifth decision you need to think about is your financing decision. Okay, are you going to raise capital? Does your business need money? Is it going to be through debt financing or equity financing? Usually startup businesses are easier to raise equity than debt, because banks are not willing to provide loans to businesses that do not have track record. So equity to relatives, to family members, and so forth. Okay, so the sixth decision is similar to the fourth one, but here's where the difference is, right? So you need to decide the type of equipment you will be contributing, right? So are you going to contribute yourself the equipment, as we mentioned in the fourth decision, or are you going to purchase this new equipment, or are you going to lease the equipment or and the other asset you need to run the business? So each one of these options will be entered in the accounting system in a different way. So for example, if you have a business, you are planning to start a business and you intend to contribute a building, right? You might actually have an option where you lease the building to the newly formed business, and you receive rent, and the business write it off as business expense. So that could be a potential strategy, but I'm not here to talk about tax strategies yet. Only the decisions you need to consider as you are going to launch your business. Okay, so the seventh decision is in terms of what your office will be or look like. Are you planning to use your home as your office space, or are you planning to rent a space, or are you planning to buy a facility, right? So all these decisions are important to consider, because a home office will allow you certain deduction, a rent space, buying a facility. All these have their different tax implication and complexities. So you have to think about each one of them carefully. So let's say, for the sake of this example, you're planning to rent a space and also use a home office. There is no limit in the amount of offices you can have to run your business. Okay, so let's just make that clear. And the eighth decision that I believe it's important for new founders to consider is in terms of whether or not they want to hire new workers. So if you plan to hire new worker, there are tax implication, documentation, paperwork that you have to keep. So if you're starting and you are just a website designer company, you don't need an additional worker at the beginning, but you might need independent contractor to help with some of the function of the business, then great, right? So you'll send to them the form 1099 and NEC at the end of the year. Okay, and here's one of the other really important piece that a lot of entrepreneurs often do not take advantage of: professional advisors. They go to their business without having a professional advisor they can rely on to help them grow their business. So you need an attorney, an accountant, an insurance consultant, a mentor or coach, or other professional advisor in your industry that are knowledgeable in your industry that will help you grow in your business. Okay, so these are the 9 decisions as a startup founder you have to make sure to go through, to cover. Better if you have an accountant and an attorney. They can help you walk through each one of these decisions and think about the implications of each one of them in order to make better business decision. So in the next video, I am going to talk about the startup expense deductions. So to make this video short, I'm not going to extend this. And if you need our help, we are a small business, an accounting small business that helps business here in Chicago, Illinois, and across the nation. Do not hesitate to contact us. I am the founder of the business, Yeto Accounting and Tax LLC, and we're here to help you and serve you. So I'd love to hear from you. If this was valuable to you, subscribe to our YouTube channel and you will get notifications when we have new videos. We try to provide valuable content every week. Okay, have a good night.